In today's era of economic uncertainty and evolving real estate trends, savvy investors are seeking innovative ways to generate passive income and build wealth. One such strategy gaining momentum is investing in rent-to-rent serviced accommodation. This approach offers a unique opportunity to leverage existing properties, tap into the lucrative hospitality sector, and achieve financial freedom. Key benefits of rent-to-rent serviced accommodation investments. Low barrier to entry. Unlike traditional property investments that require substantial capital for purchasing properties, rent-to-rent serviced accommodation offers a low barrier to entry. Investors can lease properties from landlords with minimal upfront costs, eliminating the need for hefty down payments or mortgages. Maximized rental yields. By renting properties on a short-term basis and subletting them as serviced accommodation, investors can achieve significantly higher rental yields compared to traditional long-term rentals. Serviced accommodation typically commands premium rates, especially in prime locations or tourist hotspots, leading to increased cash flow and profitability. Diverse revenue streams. Rent-to-rent serviced accommodation provides investors with multiple revenue streams. In addition to rental income from guests, investors can offer additional services such as cleaning, concierge, and amenities, further boosting profitability. Moreover, by leveraging online platforms like Airbnb and Booking.com, investors can attract a steady stream of guests and maximize occupancy rates. Flexibility and scalability. One of the key advantages of rent-to-rent serviced accommodation is its flexibility and scalability. Investors can easily scale their portfolio by leasing multiple properties and expanding their presence in high-demand markets. Additionally, unlike long-term rentals, serviced accommodation allows investors to adjust pricing and availability according to market dynamics, maximizing returns. Risk mitigation. Rent-to-rent serviced accommodation offers investors a level of risk mitigation compared to traditional buy-to-let investments. Since investors lease properties rather than own them outright, they are not exposed to fluctuations in property values or mortgage interest rates. Moreover, by diversifying their portfolio across multiple properties and locations, investors can spread risk and safeguard their investments against market volatility. Investing in rent-to-rent serviced accommodation presents a compelling opportunity for individuals looking to generate passive income, achieve financial independence, and diversify their investment portfolio. With its low barrier to entry, high rental yields, diverse revenue streams, flexibility, and risk mitigation benefits, rent-to-rent serviced accommodation emerges as a viable wealth-building strategy in today's dynamic real estate landscape. By harnessing the power of this innovative investment model, investors can unlock new avenues for growth and prosperity in the ever-evolving property market. What's more? Adaptability to changing market trends. In an era marked by rapid technological advancements and shifting consumer preferences, adaptability is key to staying ahead in the real estate market. Rent-to-rent serviced accommodation offers investors the flexibility to pivot quickly in response to changing trends and demands. Whether catering to corporate travelers, vacationers, or digital nomads, investors can tailor their offerings to meet evolving guest preferences, ensuring consistent occupancy and revenue generation. Low operational overheads. Unlike traditional hospitality businesses that require substantial investments in infrastructure, staffing, and maintenance, rent-to-rent serviced accommodation operates with minimal overheads. By leveraging existing properties and outsourcing tasks such as cleaning and guest management, investors can streamline operations and optimize profitability. This lean business model not only maximizes returns but also minimizes operational risks and complexities. Enhanced guest experience. In today's competitive hospitality landscape, delivering exceptional guest experiences is paramount to success. Rent-to-rent serviced accommodation enables investors to curate memorable stays by providing personalized amenities, concierge services, and attention to detail. By exceeding guest expectations and garnering positive reviews, investors can cultivate a loyal customer base, drive repeat bookings, and enhance brand reputation. Strategic partnerships and collaborations. Another advantage of investing in rent-to-rent serviced accommodation is the opportunity to forge strategic partnerships and collaborations. By partnering with local businesses, tourism boards, and property management companies, investors can tap into existing networks, access exclusive resources, and amplify marketing efforts. Collaborations with complementary service providers, such as transportation companies or tour operators, can further enrich the guest experience and create additional revenue streams. Sustainable income streams. Amidst economic uncertainties and market fluctuations, establishing sustainable income streams is paramount for long-term financial stability. Rent-to-rent serviced accommodation offers investors a resilient income source immune to economic downturns. The steady demand for short-term accommodation, coupled with flexible pricing strategies and diversified revenue streams, provides a reliable source of income even during challenging times. How does the rent-to-rent serviced accommodation business model operate? Identifying profitable properties. The first step in the rent-to-rent serviced accommodation journey involves identifying suitable properties with high income potential. Investors scout for properties in desirable locations with strong demand for short-term accommodation, such as tourist hotspots, business districts, or university towns. Factors such as proximity to attractions, transport links, and amenities play a crucial role in determining property suitability. Negotiating lease agreements. Once prospective properties are identified, investors negotiate lease agreements with landlords or property owners. These agreements typically involve securing a long-term lease at a fixed monthly rent, often below market value. Investors may negotiate favorable terms, such as rent-free periods or the option to sublet the property as serviced accommodation. Property furnishing and decoration. With lease agreements in place, investors proceed to furnish and decorate the properties to create inviting and comfortable living spaces. The goal is to curate an aesthetic that appeals to the target market while maximizing space utilization and functionality. Furnishings, decor, and amenities are carefully selected to enhance the guest experience and differentiate the property from competitors. Listing on short-term rental platforms. Once the properties are ready for occupancy, investors list them on popular short-term rental platforms such as Airbnb, Booking.com, or Vrbo. Detailed property listings with high-quality photos, compelling descriptions, and competitive pricing help attract potential guests and drive bookings. Investors leverage dynamic pricing strategies to optimize occupancy rates and maximize rental yields. Guest management and customer service. As bookings roll in, investors manage guest communications, check-ins, and check-outs to ensure a seamless and memorable experience. Prompt responses to inquiries, personalized welcome messages, and attentive guest support contribute to positive guest reviews and satisfaction. Investors may also offer additional services such as cleaning, maintenance, and concierge assistance to enhance the overall guest experience. Monitoring performance and optimization. To maximize profitability, investors continuously monitor property performance, occupancy rates, and guest feedback. By analyzing key metrics and trends, investors identify opportunities for optimization and improvement. Adjustments to pricing, marketing strategies, or guest amenities may be implemented to stay competitive and meet evolving guest expectations. Building brand identity and loyalty. Over time, investors aim to build a strong brand identity and foster guest loyalty. Consistent delivery of exceptional service, attention to detail, and memorable guest experiences contribute to positive word-of-mouth referrals and repeat bookings. Investors may also implement loyalty programs, exclusive offers, or partnerships to incentivize repeat business and enhance guest retention. In essence, investing in rent-to-rent serviced accommodation is not merely a financial decision but a strategic move towards building a resilient and prosperous investment portfolio. With its myriad benefits, including low barriers to entry, high rental yields, flexibility, and adaptability, rent-to-rent serviced accommodation emerges as a compelling wealth-building strategy in today's dynamic real estate landscape. By harnessing the power of this innovative investment model and embracing a customer-centric approach, investors can unlock new opportunities for growth, prosperity, and financial freedom.